Hello and welcome to another update video about Bitcoin. Bitcoin continues to be moving sideways today. Yeah, it is a little bit of a boring weekend. It is a little bit of a boring weekend. And maybe just now as we are here around the daily candle close, maybe we see finally this dip into this green support area. Yeah, it has moved sideways all day. Saturday is normally a rather quiet day, even though overnight was quite impulsive here still. And I still expect higher prices here for Bitcoin as long as we're holding this support area. This support area is the relevant support area for the fourth wave. And I'm looking here at a 1, 2, 3, 4, 5 setup. The support area hasn't changed and there is no change to the wave count from the previous video. So we are looking here still at an area between 18,824 and 20,144, whereas normally the 23.6% FIB level here at 20,144 is the FIB level that a wave 4 would normally break through to get to the 38.2. Yeah, the 38.2 is the most likely one for a wave 4. The 23.6 is not that frequently key support, but it is the minimum. So if we reach this, we need to be ready for a turnaround already. Should we not even get to this support area, for me it would indicate that the wave 3 was never finished and that we get another extension. And these can extend out in quite a brutal way. I mentioned to you in a previous video that I may revise the wave count here, and I will do that if we get above the wave 2. Which again is only in line with the idea that we probably get a fourth and a fifth wave, because if we get a fifth wave here to the upside in this ABC pattern, then we will most likely take out the wave 2. And if we take out the wave 2 high, then the idea that we are here in wave 4 within this diagonal pattern is not valid anymore, because the wave 4 can't go above the wave 2. I think it's very likely to take it out eventually. Again, as long as the support area is holding. We always have to go with that, yeah, because nobody knows the future. Nobody knows the I can't change the market. The market does what it wants, but therefore we have these key support areas, and as long as these are holding, the wave pattern stands and we can focus on higher. And again, that's the 18,824 level is basically the invalidation point. The trend is going, yeah, short-term trend, certainly to the upside. But I already mentioned to you in the previous video that I may change this here to a wave 4, the larger degree. That all of this is a wave 4 of the larger degree. And the wave pattern would then be here. Probably W X Y. That's how I would see it. The Y wave, I'm choosing the Y wave here because it is quite common that Y waves extend out quite a bit. So depending on how high we go, it could easily be a Y wave, especially as the Y wave is needed if this is an ABC. So, and this also explains very well why I want to see, to confirm that a bear market low is in. Why do I want to see to confirm that? Yeah, if you missed the previous video, what does Bitcoin need to do to confirm the bear market low? It needs to do a wave 1 up, a wave 2 down, a wave 3 up, 4 down, 5 up, ABC. We need to see the wave 1 and the wave 2. And this explains very well why. Because if we push higher here in this pattern now, WXY, in this wave 4, which would eventually result in a wave 5 to the downside and lower lows still. That's still the expectation, yeah? Nothing has changed in my view that a 14K level for Bitcoin is very likely still, just because we see a few green candles, okay? In the Y wave, we expect 3 waves, which would be here the A wave, the B wave, and the C wave. However, if we get 5 waves up, it could still be an A, B, C. Yeah, that you don't have a WXY here, but that you actually have a flat pattern, A wave, B wave, C wave. And for the C wave, we need 5 waves. So it would basically be the yellow count for this C wave. I hope that's clear. Some people might need to watch it a few times, but if we get these 5 waves up, it could be still part of that white C wave within the yellow wave 4, the revised wave 4. Yeah, so that's why I need not only 5 up, but also 3 waves down, because only if I see the 3 waves down, I can be certain that this here was not a C wave and we're breaking down. Because if we go down impulsively, this was a C wave. ABC, corrective pattern up, impulse down, or ending diagonal down. But only if I see the 5 up and the 3 down, I can be certain this was not a wave C, this was actually a wave 1, and we're coming down in wave 2. That's why you need 5 up, 3 down. And ideally you even see the breakout above the wave 1 for confirmation. Before that, it is sort of a confirmation, but you only have 2 of the 3 confirmation points that the bear market low is in. Now again, for trading, I would not necessarily wait for the breakout of the wave 1, yeah, because then you're a breakout trader. I like to trade the pullback in wave 2. So that's sort of where we are, and that's why we need to see 5 up and 3 down. Now, I'm not changing it yet, but I will probably do so. Probably do that tomorrow or so. But at least that will probably be the revised count. And other than that, there is not too much to add other than telling you that please don't FOMO. We are still early. I hope everybody DCA'd in. I did dollar cost average Bitcoin and Ethereum regularly here. Is what it is, you know. That's why dollar cost averaging in the bear market is so important. I mentioned it again and again. Yeah, I do have 2 portfolios. I've got a swing trade and a DCA portfolio. I have a DCA portfolio in which I regularly dollar cost average Bitcoin and Ethereum. Also at maybe slightly higher prices. Yeah, even if I expect still to go down to 14K, I still dollar cost average because nobody knows the future. Yeah, we're not crystal balling here. We are reading the chart based on what we see now. This can always change. And because these things happen, like these crazy bear market rallies, I do DCA, yeah, and you get these, and then that's when everybody's FOMOing in. But I don't need to FOMO in because when I dollar cost average, I'm averaging my price out anyway. You know, I buy the dips, and sometimes I buy a bit higher. It's just sort of regularly DCA. I tend to DCA only Bitcoin, Ethereum, especially in the bear market, because all the other coins, as long as we don't have a reliable bottom, again, just from experience, I've seen a couple of bear markets. Some coins just don't recover, and then the risk is too high. But with Bitcoin, Ethereum, it's sort of still risky if you compare to other assets, but I do believe in them. And by all means, it doesn't mean you shouldn't DCA in your favorite project. If you believe in it, by all means, you know, that's your individual decision. If you believe in Chili's and then you want to DCA in Chili's because you believe in it long term, by all means do it. I just want to emphasize that dollar cost averaging is important. I sometimes read comments that, you know, people sold, for example, their Solana at $10, which I don't quite get, because if you like Solana and you own Solana, why would you sell it at a historical low? Yeah, it would rather be the idea to buy it, you know, if you believe in the project anyway, and dollar cost average. But, you know, that's sort of, there's different strategies, but it's sort of the idea that dollar cost averaging is sort of something in addition to a swing trade portfolio, because even if you miss the absolute low, yeah, when prices suddenly start to go up unexpectedly, then at least you have your DCA portfolio and the value goes up quite a bit. But yeah, what else? Nothing else to mention here. We see a bit of volatility just now. I'm just wondering if we are finally going to get into this green area. Don't really have a very reliable view of what this here could be. Plenty of options, so I don't really want to add some labels here. But the idea is still, as long as we don't get above this wave 5 high at 21.3K, that we should head into this wave 4 support area. And as long as this holds, generally, I do expect higher prices. If we break above this wave 5 high, then I think we've got an extension of the third wave, especially if we do so before getting into this area. An idea what this could be, because we're coming down quite impulsive, is that we have seen here maybe an A wave down, yeah, in 3 waves, a 3-wave move up in a B wave, and we might now come down in C, 1, 2, yeah, so that's how it could play out. 1, 2, 3, 4, 5. if we look at, just change the wave degree here. If we look at, maybe a target, and this is very early days, but as soon as we break here below this wave 1 low at 20,560, it's additional confirmation that we should be heading down here in this wave pattern. Then again, as long as the 21.1K holds, the wave 2 high here. So we can calculate a target based on the idea that this was an A wave, this was a B wave. And then, yeah, perfectly, the 1-to-1 ratio is perfectly in line here with the top of the box. But I think that would be a bit short. It's obviously possible, but it would be a bit short. That's 20,120. And then we've got 19,450 as second target for the C wave. And that's my update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership and also check out our Instagram and Twitter. There's additional content every day. Also some stuff about mindset, trading tips and so on. And if you like, you can check out our trading course that we offer on morecryptoonline.com. Thanks a lot for watching. Bye-bye.